Hello and welcome to traders and investors. I'm going to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is February 6th and we're starting from euro-dollar pair with Paulo Greco. Simple trading tips and analysis for beginners. On Friday, euro-dollar pair continued to show volatile movement since the macroeconomic background was strong again. To be more precise, not exactly again, since the fundamental background was strong on Wednesday and Thursday. Anyway, the macro data was not just strong, but in fact, it was just very strong, which caused a strong volatility and a good trend movement. The US dollar went up sharply again, which fully meets our expectations. Let me remind you that we have long been waiting for a strong bearish correction, and it looks like it finally started. So the non-farm payrolls report was twice as high as the forecasted value. The ISM non-manufacturing index grew to 55.2 from 49.2. Unemployment rate went down to 3.4%. Naturally, with such results, the dollar simply had no right not to rise, which it did. Now, we expect growth to continue to fall in the midterm as one of the strongest support factors of the euro, the divergence between the European Central Bank and Federal Reserve rates, slowly starts to come down. On the 30-minute chart, the pair showed very volatile moving during the second half of the week, which resulted in a significant strengthening of the US currency. The next week should be calmer, and the pair might pull back a little bit to the upside. However, we believe that the euro will continue to fall. On the 5-minute chart, it's recommended to trade at the levels of 1.0806, 1.0867, 1.0923, 1.0966, and 1.1038. As soon as the price passes 15 pips in the right direction, you should set a stop loss to break even. On Monday, the European Union will release its retail sales report, and ECB President Christine Lagarde will also give a speech. Theoretically, those events may slightly influence the mood of traders, but in practice, though, it's very unlikely. Lagarde was speaking just this Thursday. It's unlikely that she will share new information on Monday. We got a trading signal for gold from Dimitrios Tapets. Let's have a look. Early in the Asian session, gold is trading around 1869. Below the 200 EMA located at 1879. And below the 6/8 Muri located at 1875. We can see that gold is under strong bearish pressure. It is a sign that the asset is oversold, so a technical bounce could occur in the next few hours. On February 2, gold reached a high at 1959.67. After this rally, gold made a strong technical correction of approximately of $100 in price. Today, gold hit a low seen on January 6 at 1859.54. According to the Japanese candlestick analysis, the last two daily candlesticks represent an engulfing candlestick, which means that the market is preparing for trend change in the coming days. This could be a clear sign of a technical reversal in the short to medium term. In the next few hours, we expect gold to continue bounce from the low of 1860 until reaching the resistance of the 200 EMA and the daily pivot point around 1882. Around this zone, gold will come under bearish pressure and could resume its downward cycle. On the other hand, in case gold consolidates above the downtrend channel, which was broken around 1885, it could be a clear signal to buy with targets at the psychological level of 1900. Our trading plan for the next few hours is to wait for gold to reach the 1882, this area, to sell with targets at 1860 and 1849. The EUR indicator is given a negative signal. Therefore, a strong rejection around the 200 EMA is highly probable, thus suggesting a selling opportunity. Let's moving forward with Larry Bailey and AUD USD pair forecast. On Friday, the Australian dollar made an initial downward breakthrough, as it aims to reverse into a medium-term decline. On the daily chart, the Marlin oscillator transitioned to the area of the downtrend. To fix the condition for a reversal, the price will need to settle under the MACD indicator line, which will probably already coincide with the support level of 0.6873, low of January 19. After that, the price can reach the 0.6730. On the 4-hour chart, the price slows down on the sign of the Marlin oscillator turning up. The price may make a correction either from the current levels or after the target level of 0.6873 is reached. That's all for today. See you online soon. Good luck.